Okay, so you're welcome to Easy Forest chart analysis, and we are on synthetic indexes. All right, so a couple of the markets are giving us some good vibes, and I felt, let me just record them and then also share with us. So without doing much, let me go back to our 24-hour time frame on VIX10. You've been following VIX10, you know that VIX10 has been very bearish for a very long time. It's quite obvious. You see us moving down from this side. So we are in a bearish market. All right. So price just swept this low or group structure to the downside. And we have this move right here in an attempt to break the low, but there is a failure swing. All right. So price is failing to break this low. Once that is happening, then I'm of the view that markets or price wants to push up more before dropping down. All right. So once you are getting a failure swing right here, then price is going for buy side liquidity. We have this high here. We have this high here, which price will be targeting. And as we can see today, price has already swept the high of the previous 3 days candle, 1, 2, 1, 2, 2 days candle. And then we have this high also waiting for us, and we have this fair value gap on top of it. So on top of it, so this is a fair value gap. So in terms of dealing range from this high to this low, that fair value gap is right around equilibrium. All right. So I'm of the view that price may want to push further up into this inversion fair value gap right here. So inversion fair value gap, IFVG /D, to show that it's a daily inversion fair value gap. All right. So we are still anticipating some further bullishness towards this zone for a sell continuation. And we can see that this fair value gap also lines up with this huge bearish order block. Okay, so on our daily time frame. So if you want to be a seller, you want to be a seller in premium, that is from this range high to the equilibrium, that is our premium zone. Okay, so that is where you can maximize your profit. So that is where we intend to sell from. So let me disregard this fair value gap because it is already in discount. All right. I want price to get above the red line, get into premium. We have this fair value gap in premium as well. So price may use this or it may push further into the mean threshold, the midpoint of this strong candle. All right. So when we measure from this, from the high to the low, this is the midpoint of the fair value gap. All right. That is the midpoint, the 50% area. So we call it the mean threshold. our daily order block. Daily. Let me put that at the right side and give it a different color. So at least I'd like to see if I'm going to go bearish on this asset. I'd like to see that further push towards that area before price starts declining. Okay. Nonetheless, if price decides to give us a swing structure right here, and a swing structure, I mean bullish candle, another doji, a doji, and then a bearish candle. All right, if I get this kind of setup, then I'll be more likely to consider selling this asset. But until then, I keep waiting. So we have this low here, this high that went above this high and this highs. So tomorrow, I'd like to see us open and not trade above this high and close below the previous day's low or within that range. Then the third day, I might consider selling to the downside towards this draw on liquidity or even this candle slow. All right, so that will be my sell setup on VIX10 in the upcoming days. So as we see now, VIX10 is bullish going towards that premium area. So if you want to follow it on the lower time frame, on our 1 hour time frame, you could see that after we swept this liquidity, after we swept this liquidity here, we had markets reversing all the way up and then giving us a market structure shift here, a bullish market structure shift. All right, so and price returning to deep premium right into an a fair value gap. And that seems to have held price so well, and we are seeing that push to the upside. So currently price is consolidating. We are consolidating here, and one of my trading rules about consolidation is that price cannot reverse from a consolidation. All right, so any move we see down is a fake move, and that will prompt us to look for more buying positions on these assets. What we see is that after price consolidates, there should be an expansion. After a consolidation, there should be an expansion, either higher or lower. So let's just say we have a higher expansion. Then if price decides to reverse from there, breaking the lows of the consolidation, then we know we have switched market structure. All right, market structure. So we can look for PDRs within this leg that broke the structure to continue to the downside. But if market decides to consolidate and we have a bullish mind, any move that we see coming down out of the consolidation to the lower side is just to grab liquidity. It's a fake move. So we can look for entries around the down move, look to the left to see whether there is an area price can react and return from. Then you can take your buy position from there because you are bullish, and then aim for your draw on liquidity. All right. So we have more draws on liquidity here. We have this previous day's high, 2 days high, we have this high, and then we are already still in premium in discount. So in discount, the buys should be your main agenda. All right. So That is it. So price cannot reverse from a consolidation. Price can only do two things. It can either consolidate. Price cannot do two things around a consolidation. All right. It cannot reverse from a consolidation, and price cannot also retrace from a consolidation. So any move that you see to the downside, it's not a retracement. It is just a liquidity grab. It's a trap. So that is that. So after consolidation, we need an expansion, either lower, and price may consolidate again, and then maybe go up higher before breaking the lows. All right. So after consolidation, if you have an expansion and price decides to consolidate again, all right, now price can give you a fake move to the upside, because now we have broken the low expansion and then we are consolidating. So any move, price must go up before it goes down. So any move to the upside is just to manipulate the highs here. It's just to manipulate the highs of this consolidation, and then price will just continue bearish. All right. So that is not what I'm teaching today. So let me not bother you with these things. Sorry about that. So yes, we are consolidating. Right. If you want to join the buy move, wait till you see some fake move to the downside, and we can have this breaker block here. It was an order block that failed to hold price to the upside. Price violated, it tapped this one and then went about that. If price comes back, it can be another breaker block to push price to the upside. Good morning. Okay, so that is that. So even though we are bearish on withstand, we expect some deep retracement into premium before the sell continuation. All right. So that is withstand for us. Let's go to a different asset. Withstand one is going to my 24-hour. You can see that this asset has been very bullish from here to the upside, and right before our nose, current price action is showing bearishness. All right. And there is something interesting here. If you know about market structure shift, this is a market structure shift on the 24-hour. All right. So we are no longer in a bearish move, in a bullish move again, but we have turned bearish. Now we need to measure our dealing range from this high to this low and wait for price to return to 50% of the range above the 0.5 here. All right. Into this zone before a sell continuation. This is the logic behind. Around this zone from 0.5 to the 0, we call it premium. Here is too expensive to buy from here. So sell from premium and buy from discount. From here to the 1 is premium. It's discount, sorry. So look for buy opportunities from premium, from discount to premium, and look for sell opportunities from premium to discount. So the most significant thing here that is causing this move to the upside, we are going to investigate it. Here we have price, run, sell stops here. So liquidity is already taken. Price have run, sell stops. So, and it did that with a body break. All right. So we are still bearish. And we see that price is going bullish after breaking this high. So there is a market structure shift, bullish market structure shift right here. There's that bullish market structure shift here. All right, that is to indicate that price wants to go into premium. So it's more appropriate to look for buying opportunities towards this area. Now, if price gets into premium, what are we going to look at? We have this other block in premium. We have this zone also in premium, which price can return from. Then we have this last big up close candle also. So we have these 3 points of interest that we can look to sell from. All right. So let me go down to see how we can join this buy move if we want to join it. So all right, before we go there, let's just say, let's look at this area, why price is returning from here. Now, when we look here, previously as price was going up, it decided to be choppy around here, like consolidate. And this was the low of the consolidation. And look at how price swept the low. So sell, run, sell stops. Price run on the stops at the bottom here. So before it gave us a market structure shift by breaking this high. So this is a high probability. These red candles, 3 red candles is a high probability order block. All right, so it's a bullish order block. So I'll use plus OB /D to show that it's a daily one. All right, so let me put it at the right side. So price run into that and you see the reaction. That is what is causing that move to the upside. So you can't overlook this area because it's a high zone. Price doesn't just return from any place at all. All right. So before price does any reaction, there must be something that is causing the reaction. And that is what we just investigated on this particular asset. So previously, I was talking about how we will join this buy. So let's go back to the 1 hour. So from 24 hour, we are going to 1 hour. And on our 1 hour, we can see the bullishness. Price is already going higher. We just shifted market structure here. Price had to retrace. After taking external range liquidity, price have to come to internal range liquidity. This time around, price never bothered to come into discount. And this is the zone that we have in discount. So we are not interested in this position until we see price return into the discount to give us a buy position. Then we can continue with the buys. All right. Look at how price has engineered liquidity here. Proud to that order block. All the down close candles here are order blocks. So nice liquidity engineered in discount, in premium, sitting on top of a discount order block. And that is something we will be expecting in order to join this buy. So we are not interested in joining any buy from premium here. Market can just sweep the highs and start returning to premium of the range. All right. So when that happens, we will take our buy continuation, hoping to exit around here or here, or carry price to this side. All right. So we just follow in that fashion. Thank you. Let me move to the next assets. VIX 50. I might not do all the assets, but let's see how this goes. We're already 19 minutes into the video. I don't want it to be very long. So 24 hours, always begin your day from the 24-hour time frame to have a good perspective of what is actually happening. So VIX 50 had been bullish on this side. We had some kind of a deep retracement, a failure swing. Okay, so this high failed to get into this high to break it or to even sweep the liquidity there. And then we had a break to the downside happening here. So as price failed to take this high, it created this high also, and then we can see that bearish flow to the downside. We have also engineered this high. So we are seeing that bearish order flow even on the daily time frame. If you connect our trend line, that is if you do trend lines. So let's go down here. Here we have a very valid order block because here it took our liquidity, swept the lows here, sell stops at the down here, and then it led to a shift in market structure or a break of structure. So this down close candle before this up move is a high probability bullish order block, and that is where price is trading around. Okay, high probability bullish order block on the daily time frame. So this is how ideally needs it. Okay, and when we take our premium and discount tool from this low to this high, we are already in discount. Okay, so price, if it wants to go bullish, can continue going bullish from here. And beneath that, we also have this order block, which is also of high probability. All right, so price can use any of these things to return to the upside. Why is it of high probability? Though it couldn't reach into these lows, it already took some lows here, all right, and then broke to the upside here. So it's high probabilities on that price may also want to use. So what do we want to see before we go bullish? We want to see a break in market structure on the lower time frame, like the 1 hour, 30 minutes, or 15 minutes to go bullish. Until that happens, we are not taking it. So here we have price engineered this liquidity failure swing, which I believe price will come back for, even with this move. But we see that price just swept this liquidity here, swept the low of this candle and closed back within the range. All right. And actually, this is not structure. This is some kind of a consolidation. This is a consolidation. It at the top center. This is a consolidation. We swept the low of the consolidation. And what we are saying is that price cannot reverse from a consolidation. All right. So as price is here, we were in an up move. We saw a first consolidation here. And then we saw an expansion lower. All right. An expansion lower. And right after expanding lower, we are seeing another consolidation here. So what we are more likely to see is for price to, from expansion to consolidation, price can either give us a continuation or a reversal to the downside. So that is what we are waiting for. That is what we are waiting for. So as at now, we have this liquidity here. And then we have liquidity at the tops. The down ones is already out taken by this week. So price may be targeting the up ones. So there's nothing we can do from here. There's nothing we can do from here. On the 1 hour, we have this sell stop, run on sell stops. Let me see. Run on sell stop. Already run with this week. You saw a push. Price came down but failed to take this low. And then we had a market structure shift right here. Top center. So in actual sense, we are trading inside of this bullish order block. All right. It is also high probability, but I don't like the liquidity here. This failure swing, which I think price may target. So we will leave this 50 for now, and then go to maybe probably our last asset is 25 1S, which something nice happened on it previously. A gentleman visited me, one of my friends, and I showed him something nice. This was a bearish order block, which price traded into. All right. So we were in a bullish phase. We had this impulse that broke structure here. It took out this high, and price gave us this retracement. And after we broke out of that retracement higher, and after a break of structure, price will have to retrace. And we got this retracement. And right after the retracement, we saw a continuation, but it failed to break this high. And right within that failure, it happened because price had traded into what? A bearish order block, which has liquidity right on top of it. It has a fair value gap. It also led to wow, nice one. Good evening. My name is I'm so glad. Give me some. Wow. Why is it I'm actually. All right, so sorry about that. We had a market structure shift here, bearish market structure shift right here after price went below this low with these candle bodies, and it tried to go up, but look at this liquidity. It swept that liquidity, and right above that liquidity we had a bearish order block. This green candle, it was a bearish order block, and look at how price was struggling to go above that. And one of my trading strategies I teach, or I've been using swing formations. This was a high, this was a low, a high, a lower low. So this was the formation. When I saw this candle, the third candle close like this, I knew the swing structure was complete. So the fourth candle was going to go bearish. All right. And this target is most likely to be hit. Price may target this low and it will be hit. All right, so this, we are still bearish, very bearish on VIX 25 1S. When you look at the weekly time frame, which I cannot show you here now, price is going to go bearish for a while before maybe we resume bullish. So going down to 1 hour, how could we have taken this trade after price traded into that bearish order block? So this is the place where price traded into the bearish order block. According to my trading strategy, we have this market structure shift here. Market structure shift here, because we are bullish from this side, and price swept all this liquidity here. So buy stops were run. After we ran the buy stops inside of the order block, price gave us a market structure shift, and then left behind the last bullish candle becomes our order block. It is our bearish order block minus order block backslash 1H. So this is a 1 hour to the right. Let me put it inside 14 bold. Okay, so this was our entry. This could have been your entry. That is the confirmation entry on the 1 hour. Confirmation entry on the 1 hour. So you could have taken yourself from the beginning of the order block, put your stop loss right above that, leave some small space in case market decides to sweep these highs again. And then the target is down here, which we drew on the daily time frame, which we know price may not find difficulty in reaching that. So you could have gone for this immediate low for easy targets. And we are almost there. We are almost there. So look at how market is selling. So beautiful. So beautiful. So that is it for VIX 25 1S. We are still bearish. So we may allow some days of deep retracement before some bearish continuation, or the bearishness can continue forever without giving us any deep retracement. So that is it on VIX 25 1S. Let's go to VIX 75. Maybe this will be our last one. We may not look at all the assets. The video may be too long. We are already 31 minutes into the video, and boom, VIX 75 has been bearish, as you know, has been very bearish. We have been trading down here. Market decided to slow down a bit, not too nice a move. But after staying there for a while, we see some kind of a consolidation here, which price is trying to leave. All right, price is trying to break out of this range. So this is a consolidation. Let me put it at the top center. So this is a consolidation which price is trying to leave on the daily time frame. And right inside the consolidation, we can see the last bullish candle here is a high probability order block. Why? Because let me remove the consolidation. It swept the liquidity here inside of this bearish order block. So the bearishness, the bearish order flow, was bound to continue. All right, so right inside the bearish order block, you can see my swing formation there, 3 candlestick pattern. But this did not give me the swing formation. We have this low here, we have this high, but this candle went and swept the high of this candle. So this I would have avoided, but this one couldn't be avoided. This one was the high, higher high, lower high. So this was a low and a low and a high. So after the 3rd candle completed the circle, you could have traded the 4th candle. All right. So on the 4th day, the bearishness, this is the candle. So let me go to my 1 hour to look at how we could have entered from the order block. So this was when price was trading inside of the order block. All right. So the first time it gave us a bearish market structure shift here. After we traded below this low, I'm in a hurry, right? After we traded below this low, and where is our order block? We have this up close candles, the 2 up close candles becomes our order block, and it was high probability because previously we had these highs that market swept. All right, so we have a run on buy stops happening right here. And then market structure shift. So this was a good area to trade from. So if you put your entry right at the tip of the order block, your stop loss a little bit above the red candle here, this candle would have swept you out. So this was where you could have been swept out, but you had another opportunity to enter because you know we are still bearish. You see this candle, let me remove this one. You see this candle's wick, it would have swept you one more time. So that is why I said the first swing structure, that is the formation it gave us. So I was not interested. So I avoided it. Now I'm trading the second swing structure because that one is my actual swing structure. All right. Let me go back and show you something that I said before. I was looking for a candle, a low, another candle form, and then a 3rd candle form lower. So I want the middle candle's wick to be higher than the two candles to the left and to the right. All right. This was something I was looking for. So if you look here, we don't have that here. But if we come here, we have it. This candle's low. This was the candle high, the middle candle, the third candle closed bearish. And this is the third candle. And the high is lower than this one. So that was that failure swing. So let me go back to the one. That's what I'm saying. So we avoided the first one, but we are trading the second one. All right. So the second one here, after it runs sell stops, buy stop, sorry. After it took the liquidity of this and then this liquidity, let me even stretch it to the left and then use this candle side. After I took that liquidity, what did it do? It gave us a market structure shift here. So this was where we had our market structure shift happening. So we are looking for bearishness. All right. So where could we have traded from? We have this order block. All these up close candles becomes our order block. Or we can use the previous one, this strong close candle as our order block. All right. And we see that here we didn't have an entry because we'll be looking for a fair value gap or an order block. But if you know about breaker blocks, this was a breaker block. It's one of my entry patterns. So break and retest, simply break and retest of the low. All right. Break and retest of the low. So this could have been the entry. Your stop loss above the high, which could have been a bit wider, but fair enough because, and then for easy target, this immediate low could have been your target. And look at how price hit it in the grand style. And if we're looking forward to swing, you could have held it all the way down to here and price is coming there. Price is coming there. Okay, so that is how you follow the markets. And we can see some nicely engineered buy side liquidity in case market reverse and wants to go up. So just target them and sweep them like something. So yep, this has been easy for us. Thank you so much for staying with me. I'll be doing much of these things. If you want to learn anything concerning synthetic trading, you can consult me and whatever I know, I'll teach you for free. All right. So see you. God bless you.